All right, check. Is this thing on? Are we live? Yes. Checking, making sure. Looks like we are. Okay, cool. Good morning, everybody. Welcome to the morning show. Spencer, JC. Maybe or maybe not Steve today. We'll see what happens with that. But he did make it through the storm okay, which is good news. Looks like we had some severe stormage last night in Tampa. So hope everyone is safe down there. As far as the show today, we'll be joined by Mr. Jeffrey Hirsch. Talk some seasonality. It's that time of year. We're coming into an election, the Q4. So figured we haven't talked to Jeff in a while on this show. So we'll have Jeff on at 9 o'clock. We'll have Kenny Glick on a little bit before that. We'll have Sean McLaughlin on at around 9:30 or so. And that's the plan. So let's get right to it. CPI. Yeah, that just happened. Maybe we'll talk about that. I don't know. We'll see what happens. Here we go.
All right, ladies and gentlemen, we are back. We are back. I felt a little bit guilty yesterday. I'm talking to Steve Strazza. He's bugging out a little bit. The winds are good. He's like 50-mile-an-hour winds. I was like, dude, 50-mile-an-hour winds, you're good. Don't worry about that. Key West has seen a lot of, storms in the past with water. So I was like, I think you'll be fine. And fortunately, he was fine. The weather wasn't great. And then here I am walking around New York City, just walking down Park Avenue, and not a cloud in the sky. Sun is shining. A nice cool breeze in the air. Ooh. So I felt a little bit guilty. I'm not going to lie, Spencer.
Okay. I mean, don't feel guilty. You can't help where you live and where you are, and right.
That's right. I felt even more guilty that we had 2 dinners last night.
Well, that's a whole other thing. Yeah, I'd feel
guilty at Japonica. For you guys who've never been to Japonica, go to Japonica. This place has been around in New York City. It's a sushi joint. Been around since the 70s. Think about that. Like, sushi wasn't cool yet.
I was going to say, did they eat sushi in America in the 70s?
Not really. That's the whole thing. Like, sushi wasn't even cool yet for a while. Number one, and it's been there ever since. Number two, for a restaurant in New York City to be there for, check my math, 45 years. Wow, that's pretty impressive.
Google says it became popular in the 60s in America. So that's pretty close.
Yeah, I don't know about all that.
Right.
I don't know if Dr. Google is right on this one. But nevertheless, impressive. Shout out Japonica on University in like 11th or 12th or something like that. Shout out Japonica. Same owners and stuff like that. Fantastic. And then around the corner, you have Strip House. You get your ribeye with a slab of seared foie gras on top of that. So,
yeah.
So if you like gorging your ducks and eating their liver fat and all that stuff.
Wonderful.
Fantastic. There wasn't any food left on anyone's plate after that.
Wonderful.
So shout out to Strip House.
All right. Let's talk markets.
Do it. All right, ladies and gents, we've got the Dow futures down a little bit, down 60 points. That's 14 basis points. S&P 500 futures down 11 handles. That's about 20 basis points. NASDAQ 100 futures down about 1/3%. 30-year bond futures flat around 120. Crude oil up 1.25% at 74. Copper flat at 440. Gold up 50 bips, 2640. Silver up 1%, right around 31. And Bitcoin likes it, just under 61,000, up 0.5%. Ethereum just under 2,400, up about 1%. Solana flat at 140. Binance flat at just under 570. Total crypto market cap, Spencer, 2.07 trillion. How do we feel about that?
They are trying to digest this economic data that just came out.
So I'm told.
Well, they are. I mean, they are objectively. You can just see the charts moving like in the last few minutes, right? So you got some nice big candles in the last 7 or so minutes. in the
And
future.
so why don't you tell me about the numbers and what it means for investors? You know, share with the audience what you're thinking here.
Yeah, well, so we got some CPI, which came in. I guess you can call that hot, right? A hot number, I guess. So a little bit above estimates there. The CPI for September, month over month, 0.3%. Prices were up on a year-over-year basis. Sorry, month over month basis. That versus a 0.2% estimate. Core CPI also just a smidge higher, 3.3 versus 3.2%. Year over year. CPI up price up 2.4% versus a 2.3% estimate. So basically across the board, they came in a smidge higher than estimate. I'm looking at the individual components of the CPI basket here. What seem to be the biggest drivers of the let's see, shelter up about 5%. No, up about what's shelter? No, shelter was flat. Transportation up 1.4%. Month over month. What do we have here? Used cars and trucks up 0.3%. What else? Energy down 4%. Well, commodities down 4%. Energy overall down about 2%. Month over month. That's interesting. Fuel oil down 6%. What else do we have here? Food overall up 0.4%.
So hold on, Spencer. So hold on. So can you explain to me, somebody who's not a one of these economist types, what does it mean to us? I mean, I guess it doesn't mean much to the market. Market's pretty flat as it's digesting this. So
Well,
market doesn't seem to care. Why should we care?
No. I don't say the market doesn't seem to care. I mean, you can see it. Like you can go look at pull up a 15-minute chart. I guess you're not looking at 15-minute charts, but
No, I am. I mean,
all right.
but the markets are pretty flat, consistent with where they were before. No.
Yes. Like a lot of them, TOT is more or less right back where it started. Right. I'm looking at the S&Ps right now, and
it's down a little bit since the number came out.
Yeah. Right. But
down slightly.
It's close enough.
It doesn't seem to care much. It's not that it doesn't care at all. It doesn't seem to care much.
It's just they're trying to figure out what this means as far as are we going to get another cut? Are we not going to get another cut? And what does it say about the economy? And
should we pretend that this number is legit and it's not going to get revised 3 times in the next coming quarters? Should we pretend that this is real?
Yeah, I mean, again, it's not so much about who was it? Was it Anne Marie that said we don't take the numbers seriously because we believe it? Or no, we don't trade it because we believe it. We trade it because it's there, right? That's what she said. And so the number's there. So it's a tradable event. So I think it's important. CPI has been probably the most important economic indicator really since COVID, right? So I think to brush it off and say it doesn't matter, I think is just a little bit too being a little bit too flippant with it, because I think it does matter a little bit. I think it does matter as far as what people think about the direction of the economy, and that reflects itself in price. So you can just skip all that and go right to the price, or you can actually just spend some time and think about a little bit what is the data showing. And I think the data shows that the market's trying to figure it out. It's been 10 minutes, right?
Yeah. Why don't we go to slide 2?
What's on slide 2? Do I want to know?
Yeah, you want to know.
Okay. What is this?
What does it look like to you?
Yeah, all-time highs. I saw that yesterday.
So new all-time highs for the S&P 500 yesterday. I mean, that's no joke. I mean, we've gone back and we've studied markets, and we've studied the divergences that you see before tops and the breadth deterioration that you see before tops, the expansion and new lows that you see before tops. And we just haven't seen any of those. Yesterday was the 44th new all-time high. The most ever was 57.
What year was that? Ryan Dietrich, please tell me.
No, I'm sorry. Sorry. the 44 new all-time highs this year extrapolates to 57 for the year.
Wow.
If we were to continue at this pace.
That sounds good.
The highest was 77 new highs, and that was 1995. In 2021, you had 70 new all-time highs. But 77 in 1995 was a big one. 1964, you had 65 of them. So far, 44 new all-time highs for the S&P 500 this year. And then we did the math on, because we closed the week last week at a new all-time high for the S&P 500, and the VIX was almost at 20. So we went back and we said, okay, how many times has the S&P closed the week at a new all-time high and the VIX be close to 20? As it turns out, a whole bunch. It's happened 40. This was the 47th highest volatility index, with the S&P 500 closing at a new all-time high. The 47th highest VIX. So not as rare as I would have thought. I would have expected that the S&P making new all-time highs with the VIX close to 20 would be more rare. As it turns out, it's not that rare. 47th time. Is that a little surprising, Spencer?
Yeah, and data like this is exactly why I kind of like came around on being like almost permable, right? Because you do when you hear how often stats like how often there are new highs or how often the market is within 5 or 10% of a new high, and it's like all the time, right? And it makes you bullish, right? So
I got a chart for us, and I think that this one really tells really an interesting story. It's an all-time high. There were a lot of those yesterday. This one I think really speaks volumes. Throw up the news slide too. This one speaks volumes because it tells a couple of stories here that I want to walk through. So zoom in there, Spencer. So this is industrial. So this is the S&P Industrial Sector Index, which historically has the highest correlation with the S&P 500 of all of the S&P sector indexes, more so than technology, more so than financials. I think there's a couple of reasons for that. Obviously, industrials being cyclical, but also the very diversified nature of this index. There isn't a single stock that represents more than 4% of the entire index. The other sectors can't say that. So I think the sheer diversity among the index, plus, industrials are like a catch-all for all kinds of industries. You got waste management companies and construction companies and aerospace and defense, and you just got so much shit going on in industrials that it turns out to be a very diversified index, and that's probably a big reason why it's so highly correlated with the S&P 500. Nevertheless, a new all-time high yesterday, and I'm not like Mr. Moving Average guy, far from it, but I did want to point out a rising 50-day moving average above a rising 200-day moving average, and prices above both. And the reason I bring that up is because there's a lot of that going on in the market these days, a lot. So not only are industrials a good representation of the overall market because of what's in it and historical data, but also it's a very good representation of how a lot of stocks and sector indexes out there are trending above a rising 50 and 200-day moving average, which you see quite often in bull markets, in healthy environments. Go back and look, and you're going to see this sort of thing a lot. Like go back to your favorite bull market. Go back to your favorite uptrend in a stock, right? Just go back to like a good environment for an index, for bonds, for whatever it is that you're looking at. You know what you're going to see? You're going to see a lot of this.
Quick question. That last bottom there, was that the VIX explosion in August?
That last
the green arrow to all the way to the right, the furthest green arrow. That yeah?
When they dug in bottom right there at that support level, yes.
That was the August VIX thing, right?
Yep.
Okay.
That was the August 5th, and it couldn't even make a new low.
Well, I mean, it technically did, but
on an intraday basis.
Okay, fine, whatever. Yeah, all right.
My point is it held, which was impressive then.
Yeah.
right?
Well, everything kind of whipsawed so quickly that that bounce happened so fast. Like if you blinked, you missed it.
Yeah.
And this just goes to show, man. I mean, if I've said it once, said 1,000 times, getting out is the easy part. Getting back in is the hard part. If you sold down there, what are you going to do now? Look what you
we
missed.
should have been selling puts. Throw
Yeah,
up
right.
slide 4.
Okay, is this new slide 4? Hold on.
So what we've got here, dropping these on Wednesdays. Premium members of All-Star Charts already get access to this. But this is, depending on who you ask on our team, they'll tell you that this is their favorite scan that we do. Strazza says this is his favorite outside of he likes the short interest names better than this one, but fine, right? Same idea. You're going to get great trades out of this. We've had a lot of success with names coming out of this. So what we're seeing here, we're looking for growth stocks. This is the 2 to 100 club. We are looking for stocks that can grow to 100 billion. So you're not going to find any consumer staples on this list. You're not going to find any utilities on this list. These are growth stocks. And we're looking for the next $100 billion company. Now, we're not going to start with the one that's at 99 billion because that doesn't make any sense. So we're looking for stocks between 2 billion and 30 billion. So at the very least, if the company's already at 30 billion, we could still get a triple before getting to 100. So this is the 2 to 100 club. And guys, there are opportunities here. And here's the thing, and you could take it off the screen, Spencer. Mary says it's one of her faves. Of course it is. That's not surprising to hear from you, Mary. Nevertheless, when you go back, and I would encourage everyone to do it because it might seem like common sense and obvious, like thanks, JC. But if you actually go through the exercise, it's really going to reiterate this thought process that is critically important to understanding how the biggest winners of all time behave. Go back. Go and look at the biggest winners ever. Look at your biggest winners. Look at the big winners that you missed, that you wish you were in, that your neighbor's in, a big winner that you heard about. Doesn't matter. Go through all of them. You know what you're going to find? You're going to find that along the way of you making all this money or missing out on all this money, the stock made a lot of new highs along the way, right? Because the stock is not going to be a huge winner and is not going to scale from 20 billion, let's say, to 100 billion by making a lot of new lows. You're not going to see a lot of new 52-week lows in the biggest winners ever. You're going to see a lot of new highs. So if we know, and people are like, thanks, JC, master of the obvious. Yeah, fine. But I'm just reiterating the point, reverse engineer what the big winners are doing. What are they doing? They're making a lot of new highs. So if we know that mathematically the only way to have a huge winner is stocks that are making a lot of new highs, then why wouldn't we just start with the stocks that are making new highs?
Makes sense.
You feel me on this, Spencer? Like
I'm with you.
Like I know this is like very like common sense and elementary. Like thanks, JC. The big winners make a lot of new highs, JC. Yeah, right. But just think about what that means. If we know that to be true, then why wouldn't we just start there?
I think, okay. We actually got an email about this a couple of days ago, and I think we probably should do some kind of a video.
I saw that email. Why don't you bring it up? We'll address it right now.
Okay. I have to go dig it out. But
I think the email was, why does All-Star Charts come up with so many trades that are making new highs?
Yeah, I got it. Because I totally get where he's coming from. So the question was essentially, why do you guys focus on essentially buying things with momentum and not buying things like after a pullback, right? That was just and really what it was saying was a lot of people look for deals, right? They look for things at a discount, right? They see something go up in price and they think, oh, I'll just wait for a pullback. And that's I'm a lot of times I'm the same way, right? Like it's sort of human nature to think, oh, I'll just wait till it gets back here. It's a little bit too rich for my blood, or there's so many things you can say, right? Warren Buffett himself said, right? You want to buy when there's blood on the streets. But that's not what we're doing here. It's not what JC is doing. So maybe
let me address a few of these things.
Yeah.
Number one, the only way to make sure that you own the best stocks is to buy the best stocks. First of all, like, speaking of common sense, but not something that's thought about a lot. If you want to own the best stocks, then buy the best stocks. That's number one. Number two, we have the data and we know that asset prices trend. So something that's going up and going up fast there's a much higher likelihood that it's going to continue to go up and continue to go up fast and continue to outperform its peers. We know that. So we have that data too. Also, we are in a market environment where the stock market is making new all-time highs every month. The S&P 500, the German DAX, India, Dow Jones Industrial Average, the NASDAQ 100 just closed at an all-time high. We're in a bull market. So in a bull market, we want to own the leaders for sure. So if we're buying things that are selling off when the stock market's making new all-time highs, that's probably not that great. Now, with respects to buying pullbacks, now that we are absolutely doing, in fact, we did that yesterday. I know Sean's going to come on in a minute and we'll talk about that. But buying these pullbacks, in fact, when these pullbacks come in, we love, especially in a bull market, we love selling puts, selling naked puts. You get that sell-off, volatility is elevated on that selling because, of course, people want the insurance after the pullback. That's human nature. So fine. The stock pulls back. It's in an uptrend. People are now buying insurance because they're panicking, and we will sell it to them. Very simply. We did that yesterday. I'm not going to talk about the stock, but we sold naked puts yesterday. Very simple. On a blue chip mega cap stock that has recently pulled back. Volatility is elevated. And I was very surprised at how much premium we were able to receive for selling those puts. And then in a lot of other cases, so in this particular case, it's a stock that I just wanted to own. So selling naked puts, if I'm wrong and we get put the stock, I own the stock at a discount. That's cool. Or the stock rips and I get to collect all that cash and keep it for myself. Right? Okay. Either way is good. In other scenarios, we could sell those puts, take that cash, and buy out of the money calls, right? And what's called a risk reversal. We do that a lot, but we can't do that when the stock is making new all-time highs. We have to do that when premiums are elevated, and that's on that pullback. So the answer, so there's a lot of answers, but I hope that kind of shed some light, because this is a really important topic. It was a great question, Spencer.
Yeah. So maybe I shouldn't use the word pullbacks, and I should have used the word downtrends, because you guys do not buy stocks in downtrends. So can you explain the difference between a pullback and a downtrend?
There's a time and a place. Right now, in the middle of a raging bull market, to be buying downtrends makes little sense. In 2023, when there were downtrends that were completing with momentum divergences setting up, like C Limited is a perfect example. The stock was definitely making new multi-year lows. They may have been all-time lows. I got to pull out the chart. This thing was in a severe downtrend, and it may have been the best trade of the year last year. Remember the stock that Sean thought was a shipping company?
Yeah, that's what this is.
C Limited, right? Yeah. That was still in a downtrend, but it was a different market environment. Like, I wouldn't do that right now, but in 2023, it was a different story.
Yeah. So bottom line is understand the environment you're in.
Yes.
If you're in a bear market, then odds are most things are going down. So yeah, you're probably going to end up buying something on weakness, or you buy it on strength within weakness, right? But that's not what's happening right now.
Yeah, Lauren's asking, and we'll bring on Kenny's coming in. Is Kenny in the house?
Yeah, we got Kenny.
Lauren quickly is asking how we define the leaders. What characteristics do you look for? We look for relative strength, and we look for momentum. Positive momentum and relative strength. If they don't have those things, they're not leaders. Simple. Hope that helps, Lauren.
All right, let's bring on Kenny.
Bring him out. Bring him out.
It's been a long time coming. They ain't cuffing my clock, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Kenny Glick in the house.
Don't call it a pullback. What? You don't
I've
get
been
it.
here for years.
Yeah, somebody gets it.
I said knock you out.
All right.
Love it.
All right, $5 if anybody understands this shirt. Let's go.
Does that say suck my NASDAQ?
No, it says this being what?
Milt.
I don't get it.
It's a bachelor party reference. It's deep. It's a deep cut, and of course, throw out
Kids these days are too young to have watched Bachelor Party, Kenny.
Bachelor Party, the first R-rated movie I ever saw. I saw
Is that true?
Gremlins. We used to sneak into the movie theaters, and we would just stay there all day. I saw Gremlins, then I went to go see Ghostbusters, and then it ended with Bachelor Party. One of the greatest days of my young life.
Director.
I watched a video the other day of like how to hack the system, and like the guy went to the movie theater with like a baby carriage, and the baby carriage was like full of beers and snacks, and like there was no baby in there.
Oh,
he
yeah.
just walked right in, and he was just chill. It was pretty funny, actually.
Oh yeah, my mom. She'd take the corn, and she would do with the oil in the bottom of the pan. You'd fry up the popcorn. We put it in a plastic bag and bring it into the movie theater. That was what we did. The good old days of living on
good old days, Kenny, scamming the system.
Directed by Neil Israel. No relation. No relation.
If it's free, it's for me. The Al Glick playbook. Yeah.
Anyway.
So new all-time highs yesterday, Kenny Glick. I was in New York City yesterday. There was a lot of bull market things happening. I was very observant. It was not, I was not seeing too much bear market behavior. Quite the opposite yesterday. Talk to me, Kenny. Are we riding this trend, or are we, the old saying, if you ain't fading, you ain't trading?
Pretty heavy, hey dude. Yes. Here's the reason I still don't own stocks. Take a look at what PayPal's doing. See, this is what I was worried about. I was worried, but yet I was expecting it. This is why I'd rather be liquid and loving it. I love my stock, but I'll just trade it every day. Somebody's getting in our way with a downgrade this morning. But that's good because we sold into the move again yesterday. We come in today, we say, hey, what's going on with PayPal? So now it might be coming back to that 78.50 area, and we could do it all over again. So round and round, as much as it looks like the market goes up every day, when it comes to me, I just tend to find stocks that seem to go round and round and round and round, like Rambus 2 years later, basically the same price.
But Kenny, this 3% pullback in PayPal, is that enough of a pullback?
Well, I'm looking. You see that little orange line right there? That's the 10-day. So I'm waiting for see it go to 78.88, and this little double bottom right there underneath 78.60, and then I go back to again, we've been following it for about 20 days. So I just go look at 20 days worth of data, and it's telling me around 76.89. So I wait for the VWAP to tell me what to do. But if it turns prematurely and starts to run, I'll be involved. But more importantly, we started earnings season today. I almost forget Delta Airlines is the jump off now. They come out the day before the bank starts. So here's Delta Airlines. This is just this morning. Take a look at this. This is a monstrous move. So again, the earnings come out, the stock gets hammered. And again, I'm not going to bullshit you. I just woke up about 10 minutes ago, watching the Yankees and the Mets and all that stuff. I just love sports. So here it is. You get smacked down. You consolidate under the VWAP. You have this one more capitulation, and you guys know what it's called now, the faux, show, fake out, shake out, and then it hovers at the VWAP, and then it says, all right, see ya, and then here's the breakout. That is a monstrous move. That's 48, and that's prior day VWAP back to 51. Now, if I was awake, I would have enjoyed this move, but because I missed it, now I have to wait to see if it pulls back to hold the VWAP and consolidate here. And if it does, we got another reason to buy it. And that's
real
where I'm
life.
at.
That's real life, folks. I love how shamelessly he's talking about, missing an opportunity. For those of you listening out there, not a day goes by where I don't miss an opportunity. I miss opportunities every single day. Yeah. And you can let it get to you, and you can have that FOMO, and you could suffer from that, or you can embrace the fact that you're going to miss trades every day.
And that's a great point.
Charged, and that's okay.
Yeah, that's a great point because, again, I sit in this room, and then, back when my wife was around a little bit more, because now she's working again, I would come out of this room and she would tell by the look on my face, oh, did you miss a trade and then it went up after you sold it or something stupid like that? Oh, could you tell me that story one more time? Oh, please. And, she would rub it in my face. And the point is like, you get all upset that you might have missed something. But think about it. you have that every day, and you got to realize there's going to be another trade. And we just
that's the thing. That's the thing, folks. The market doesn't guarantee almost anything. The one thing that the market does guarantee is that there's going to be more opportunities. It's the only thing it guarantees.
I used to get so sad and upset about missed opportunities, and I was like, man, you know what? It's worse than losing money. No, it's not. No. Losing money is worse.
Yes. Thank you.
Yeah.
Kenny, one more. What's on the move?
Well, I got to watch PayPal. I got to watch Delta Airlines, and I'm watching UVXY because it is doing weird things like going up. So I don't understand how come UVXY, and this is actually a real question for anybody out there. I don't understand why this product follows the VWAP, because it's really not a volume-based product. It's based on the VIX, it's based on the S&P futures, and yet it still seems to travel around the blues and the orange lines. So right now, this is UVXY showing us some strength. If it goes back negative, I'm immediately going to short it, and that usually tells you that the coast is clear to start buying stocks. So right now, as it's trending higher, I'm just assuming it's going to roll over and die, and the market's going to gain its strength, basically like the same day every day. And tomorrow, friends, we begin JP Morgan in the morning, and we'll be looking at those bank stocks, and you'll be looking at them without me. I'm on my way to Atlanta. So far, so good. I think I'm on that plane tomorrow. So
nice.
Good luck, and I'll see you guys on Monday.
What's the big earnings next week?
Everything. We start with the banks, and then you got Goldman Sachs, you got Citibank. So tomorrow, I think you got. I'll give you a quick list. You got. I believe it's JP Morgan is the most important one.
Yes, that's tomorrow.
All right. And then you have, let me see the quick list. Where'd it go? I had it. JP Morgan, Wells Fargo,
and then JC next week is Netflix. I don't know. Johnson Johnson. Do you care about them?
You got it.
Who else do you have next week?
Well, we'll see if Walgreens is going out of business. WBA is coming out.
JC's favorite UNH is next week, right?
Goldman Sachs is not my favorite. Goldman Sachs, the only time I traded is on earnings day. The stock is notorious for gapping and failing. So if it gaps up big and all the news is positive, it generally gives it back. And if there's something that makes the stock gap down in the morning, it generally gets bought. So GS on I think that's Tuesday, maybe.
That's usually on a Tuesday.
Yeah, Tuesday on the 15th. So, we'll be on all of these every morning. That's my focus list. As soon as earnings starts, that's my focus list. I just go where the big guys are playing. And, Johnson Johnson, also Goldman Sachs. I got PNC, Albertsons, that kind of stuff. And then we'll be talking about it every morning.
Love it, Kenny.
All right.
All right. Man. Good luck. I'll see you guys on Monday. Be safe, and hopefully the storm wasn't too bad. And let's go Mets. Let's go Yankees. Sick.
That's it.
Adios. JC loves earnings season more and more these days because we've been developing strategies to take advantage of it. So rather than looking at earnings like landmines, which we still look at earnings like landmines, for one of our strategies, we're specifically looking towards that. And then with the day trading stuff, for sure, always. So I've come around, guys. I've come around on the earnings season. I'm not gonna lie. I might not get as giddy about it as Spencer, but I'm coming around.
I feel like it's game day. You only get like 4 game days a year, right? And so you actually get to get some
game month. It's not game day.
Yeah, all right.
Earnings season lasts forever.
Oh no, it's game day for the company. All right,
yeah.
Let's talk seasonality. Let's bring on one Jeff Hirsch, shall we?
Love it.
All right.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Jeffrey Hirsch, how are you, my friend?
Good, man. How you guys doing?
Phil Perlman was singing your praises yesterday. You know that?
Oh, boy. I'm pumped for Phil. I'm going to see him later.
He was saying what a great chef you are.
Well, it's something I've been doing for years. Yeah. I guess he was talking about the pan-seared ahi I did.
He was talking about your chicken,
Can
you send me that Peruvian marinade?
Yeah, it's also the actual cooking technique that we need to discuss.
Oh, is that what it is?
Not just a marinade. You gotta cook it slow. You gotta get some smoke in there.
Here we go.
Keep your eye on it.
Jeff Hirsch.
Your wine
the way I learned it was that you want to buy in October and get yourself sober. Isn't that how it is?
It is. I am ready. I'm chomping at the bit. We are in best months prep mode. Last week we did our monthly webinar with members and subscribers, and just sort of sitting there, kind of like Giancarlo Stanton last night, waiting for those fat pitches. So shout out to Kenny for watching the Yankees. I was there. We were actually at the game on Monday night, so it was kind of a little bit of bad juju. I went with my son, but it's a good time, even though the bats were quiet on Monday night. But it is that time. I mean, I got my Almanac open. First thing it says on the Almanac page for October is beware of Octoberphobia. Still concerned. I know, clearly you're in a bull market.
What that means, Octoberphobia.
It's the fear of October because of the history of crashes and massacres and sell-offs and 87 and 29 and Black Friday and 78.
All the Perma Bears' favorite dates.
October 08, the worst week ever, But it's really, as the big guy, my father, Yale, put in the 69 Almanac. October is a bear killer. It's a bargain month. It's the best time to buy stocks, best time to buy tech stocks, small caps. Like Kenny, we're a little bit and great to see him on there. He's so fun. We're also in a bit of cash. You know how we trade. We're getting in October, as you said. We get ourselves. So we've been sort of paring stuff back over the last 4 months. I'm at a lot of cash. Sold my bonds, my short-term bonds. I'm ready to pounce. We have buy lists out there for all the ETF sectors. But this is the time to get in there or get ready to get in there. We're looking for a MACD confirm. I know Kenny's big on the VWAP, like our friend Brian Shannon also. They trade that very well. We use MACD for years. MACD, everyone knows what that is on this show, I'm sure. Clarify on which MACD to use. It's not something you use willy-nilly just for the hell of it, just because there's a crossover or whatever. You want to use it to confirm another reason to buy, whether it's, my wife said Levi's look good with Beyonce and all the kids are wearing them, or it's a seasonal trade for me. We look to get into the seasonal trade using a MACD to confirm it's time to get in. We start looking right here. We're on MACD buy signal watch as of October 1st. Are you
looking at dailies or weekly MACDs?
Daily MACDs, but also everyone's really uses the 12-26-9. That's the one that comes up when in any software or any charting that you look at. But the original research by Jerry Appel, the late great, was for the buy side to use a faster, shorter term MACD, the 8-17-9, and we
you adjusted.
Yeah, we use the 12-26. Cheers. On the sell side, tops are processed. It's a slower, longer MACD. Takes a little more time. Bottoms tend to be a little quicker.
Oh, that's interesting how you do that. So you change it on tops and bottoms. That's really interesting. I like that.
Yeah. And the other thing with, the techs and NASDAQ really ruling the world these days. I mean, you can see the sort of shifting in the patterns where S&P is starting to behave a lot like NASDAQ, which tracks the best 8 months. The NASDAQ sell signal was on point this year on June 25th, because it goes November to June instead of the best 6 months, November to April. But we look for confirm across the three main indices, Dow, S&P, NASDAQ. So we need new crossovers. That's the histogram, going from negative to positive, the signal line crossing through the MACD line on all three. Dow's giving us a little more room here. Sometimes we get in a little bit early. Sometimes we get a little sell-off like we had last.
Hold on. I want to take a step back for 1 second and point out two things. First of all, Spencer, are you hearing Hirsch over here? We should have had Hirsch on the Momentum Mastermind instead of waiting to invite him to the Seasonality one in a few weeks. This is fantastic. Everything that Jeff is saying, we discussed last week it was momentum week last week. We talked about all these things, and Jeff, the fact that all these things you're just spitting out, just hot fire. This is fantastic.
Dude, this is the system.
So for those of you listening, what he's describing is the following. Based on history, and the Hirsch family, obviously the greatest that ever did it with respects to understanding the cycles throughout history, one would suggest based on that data that this October period is one of the better times to be looking to buy stocks in the market, right? Hence the buy in October and get yourself sober. In a similar way to maybe insider transactions, for example, where we see the CEO of a company buy $3 million worth of stock. Oh, wow. Now, we're not just going to blindly buy XYZ stock because the CEO and CFO are loading up. We're not arbitrarily going to buy stocks because it's October, right? So what Jeff is talking about is that he is taking the data. The data suggests that we should be looking closer to be buying stocks in October, and then has a system in place that then triggers that entry. And that can be applied in an infinite amount of ways. Let's say like you're a fundamental guy and you think that this company is doing something great. You could use that, right? So like whatever your process is, seasonality or otherwise, what Jeff is saying is very valuable.
Yeah, I mean, the combination of multiple disciplines is helpful. I mean, I know, we've had this discussion before. You're pure tech, pretty technical, pretty much, and you're fantastic at it. But, we overlay with fundamentals, also looking at monetary policy and macro trends and sentiment, which we've talked about. We both liked investors' intelligence because it's been around for a while. But looking at those 5 disciplines, for me, seasonality, fundamentals, technicals, monetary, and sentiment. Right now, you guys talk about earnings season. I get, excited here too, chomp at the bit. We're looking at a buy signal for seasonality. We're looking at earnings season for stocks, and we run our stock screen where we pick a new basket, probably a couple of baskets, and we take those, the Q3 earnings numbers here that we're getting, and we run the screens with those new numbers, looking for stocks that are kicking off, showing an acceleration of revenue growth, earnings growth, good valuations, technical health, not running away from the market, not running away, not huge relative strength, but like sort of just marking time under Wall Street's radar and under followed. Not a lot of analysts tracking it. Just a company, quietly doing great business and making money and just looking solid on the charts and also on the balance sheets.
Jeff, last October was a fantastic time to be buying stocks.
Not as good as 22.
Hold on. Wait. You're stealing my thunder.
Sorry.
2022, October, great time to be buying stocks. October 2021, great time to be buying stocks.
2020.
October 2020, great time to be buying stocks. October 2019, great time to be buying stocks. In all of those instances, there was a pullback into October.
Mm-hmm.
We have not seen that this October.
We may not, but we're looking for it.
If there is no pullback, what does that suggest about the overall health of the market?
Oh, come on. Super healthy. I mean, gains beget gains. It's strength. I mean, you're talking about missing trades. I wish I was in at the lows in September and all that stuff. But over time, you stick to your system, what works for you. Just with the MACD, one little nuance there. Those buy signals, those crossovers are better when they come from below the zero line. But we take them if they're above. You stick to the rules, and we've adjusted those rules over the years as things have changed. But if it goes, it goes. You're going to miss a few opportunities, as you said. There's only one kind of person that buys the bottom and sells the top all the time. That's a liar.
That's right.
But, yeah. So pigs get slaughtered. Bulls make money, bears make money, all those cute little sayings. But the bulk of the market's moves, are from November through April. And, you were talking about CEOs and that kind of, just because there's insider buying or whatever, it made me think of the way the institutional money and fund flows really drive the market and the market behavior. and just to sort of, maybe give people a little understanding of why October. It's not just seasonal. Yes, it's season. We got the Jewish holidays, got the New Year's, we got the fourth quarter beginning, the end of Q3, window dressing, portfolio restructuring. And then October, there's this other thing. There's the October 31st deadline for mutual funds and 40 Act funds, where they have to reconcile their accounting and make for distributions using the October 31st deadline. They reconcile the 10 months of the current year with the 10 months of the last year, and then the full year of the last year. And this is another reason why that there's that institutional churn, and has the market sort of prone to sell-offs. We don't always get them. Nothing works 100% of the time. JC, you don't work 100% of the time. I seen you outside the office. I mean, maybe 95% of the time, 99.
You should have seen us at Strip House last night. Woo!
Woo.
Let me ask you this, Jeff. Going into a post-election year, right? So we all know best 3-month period of the year, November, December, January. Best 6-month period of the year is that November through April period. We know that. We know Januaries tend to be strong, right? We know you buy in October, get yourself sober. We know that seasonality. But can you tell me a little bit more about, now that's election year finishing up, we get that ripper into the end of the year historically, but how does next year proceed?
Well, funny you should say, or you should bring it up. The post-election year edition of the Stock Traders Almanac to 2025, the 58th, same age as me, is just hitting the warehouses right now. So we'll be getting them out to our members ASAP. Yours will be autographed as per usual and sent to you at your home.
It might be worth some money one day, Jeff, those signatures, you never know.
Maybe I'll just do it like a famous sports star. I'll just do the date and my name and not put your name on it, right?
You got to put Hall of Fame under.
So the post-election year edition, the thing that we're seeing is, everyone's got this memory from some of it from our work that the post-election year is one of the bad years. Well, ain't so bad anymore. It's improved quite a lot since World War II, and since 1985, it's the best year of the 4-year cycle, even better than the pre-election year. Up.
Which part of the year is the best part?
Beginnings, the first quarter and the fourth quarter usually. We look at for some weakness in Q1, Q2 and Q3, maybe a little bit early on, or often a dip around the end of Q1. You get those like first 100-day, presidential periods where everyone's sort of, they're not doing what they said, kind of thing. Right. So
no matter what they do, they'll say they're not doing what they said.
And everyone don't get so upset about who's in office. It's really the event that's more important. I mean, that's what we try to teach people with the Almanac is it's the cycle. It's not the policies of this one or that one, because Wall Street's smarter than, Washington, and they're going to, even Diamond said it publicly. It doesn't matter. We'll adjust to who's ever in there. The stock market goes on for a lot longer than these administrations.
Congress historically plays a bigger role than who the president is. Isn't that right?
Yeah, everyone used to say that Republican presidents are better for the markets. Republican Congresses, and I just saw a little story this morning. It looks like
of all the government shit, the best one is Republican Congress, not gridlock.
Democratic president and Republican Congress.
Got it.
Not split Congress.
Not split Congress.
That's right here. Here, I don't have the book right here yet because it's not printed. I'm ready to show you a page. But I have that chart in there where it's actually right in the Outlook where the bar chart of Democratic presidents, Republican Congress is like 16.4% or whatever it is above all of them. So if you're going to vote for the bull market, you know how to vote.
Democrat president, Republican Congress.
That's really if you think about it, it makes sense.
What about just Republican Congress, regardless of who the president is? Is there a big difference there between?
Still better than Democratic Congress
by a lot. No. I'm saying Republican Congress and Democrat president. Is that far superior than a Republican Congress and Republican president?
Yes. I mean,
depending on your definition. Remember, just as investors, the sample sizes here are not not enormous. So
No.
we know that going in. Like this is like anything else, it's an imperfect process with incomplete information, and we use it as part of the weight of the evidence, knowing that we're trying to make the best decisions with incomplete information, right?
Yeah, and then there's the overarching super boom.
Why don't you tell me about the super boom? Because I think I just like saying super boom. Like super boom should be like it should be like a there you go. Should be like a song, like a song, super boom. Like maybe like a merengue song, super boom, super boom, super boom.
Thinking about it. Maybe something funkier.
Yeah. If you had more Puerto Rican in you, it would work.
I have none.
I could tell. So tell me about the super boom.
Maybe a little bit of rhythm though. Super boom was a cycle that Yale discovered back in '76, where the market makes these huge 500% moves following war, pushed by inflation, and driven by what I've dubbed a culturally enabling paradigm shifting technology, which I believe we're in the early mid innings of with AI and all of the related, support technologies and everything around it. So back in 2010, with the Dow at about 10,000, I put out this forecast in our newsletter for Dow 38,820 by the year 2025. Everybody knows we've come in a bit early there, which is great. I've got an update that pushes us over 60,000 on the Dow, just because using the Dow because it's the one that Yale built it on. With the moves after World War I, World War II, and Vietnam, and it's clear that we are in a secular bull market, in addition to a cyclical one that you were referencing earlier on when I was backstage, that you've been talking about a lot, and no argument here.
Do you incorporate global like international indexes as part of this secular bull market? How do you think about that?
Not as much. I don't find the rest of the world to be as consistent and stable as the U.S. markets. I mean,
and the U.S. is half the world.
It's half the world. It drives it. It's nice when the rest of the world confirms some of these things. But we've seen, over the recent years, economically, market-wise, the U.S. has really shown some resilience, testament to the system that we have here. So no, not so much. A little bit. It's there, but it's not as much of a concern for me. Not that people shouldn't trade that a little bit, but it's not my cup of tea.
What about the commodities? I know you've done a lot of seasonal work with copper and crude oil and metals. Can you, before we have the seasonality guy. You're the seasonality guy, Jeff. You're the seasonality guy. Which, by the way, seasonality falls within the umbrella of technical analysis. I like to remind you of that because in Jeff's world, they're two separate things. No, sir. Technical analysis is the study of the behavior of the market and therefore market participants. And when we are looking at seasonality or sentiment, by the way, are we or are we not analyzing the behavior of the market and its participants as opposed to those goods and services that a particular market might deal with, which we haven't discussed at all once in this conversation. So I appreciate you being such a hardcore technician, Jeff Hirsch. I'd love to hear your thoughts on, from a commodity standpoint, we're talking about a super boom in the equities market. What about the super boom in the commodities market, new all-time highs in gold?
Yeah, I mean, this is also a big seasonal time. We're in the GDX and the GLD. One of the things in the old almanacs was fourth quarter gold. It used to be ASA gold. That's still strong. There's always some chatter about inflation in gold. I'm not as convinced. I think that the stock market is a better hedge against inflation historically than gold. I think there's some geopolitical premium in gold as well these days. I think it's got a little bit of the concern of what's going on around the world that's got the bid in gold. In addition to the commodity boom, I mean, we're seeing that oil's got some issues with natural gas as well. Got some oversupply. right now it's sort of a quiet period for us with the commodities. Oil starts to pick up in December, including the stock sector, like the XLE type of trades. Natural gas also, they both tend to make their seasonal lows around the December to February period, depending upon if it's the, producers.
Are you bringing back the Commodity Traders Almanac?
We are.
Oh, yeah.
It's in the works right now.
Love it. It's CMT level 4 stuff, folks.
I still got to get through level 2 and 3.
Are you doing it?
I'm thinking about it. It's a lot for me at this stage of the game, but
you're good.
We'll be all right.
And the CMT Association would be very fortunate to have Jeff Hirsch as part of the
I'm a
community.
paying member for sure, but
yeah. I think it'll be great for you because I think you'll learn a lot and you'll appreciate it, and the community is great, which you're very familiar with. But I think the CMT is the biggest winner of Jeff Hirsch having a CMT between you and me.
We'll talk.
And that's cool. That's cool too.
We still got to get our golf game in, and we can talk about it out there.
Yeah, let's go. Let's do it. We'll study for the CMT exam. I'll help you out.
Dude, do not talk about anything else while I'm playing golf.
Jeff Hirsch takes this golf very seriously.
I got enough problems staying focused on a ball.
He takes it very seriously. You got the thing, right? So it tells you how far you are. What's the thing? The binoculars?
I can't do that.
No.
I just look at whatever it says on. I got an app on my phone or in the cart. I can't be bothered with that thing.
Yeah.
That's anyway.
All right, Jeff, give us can you tell us a little bit maybe on the before you run on the sectors? Best 3-month period of the year begins.
Oh my God.
Coming up. What sectors should be on our radar?
Turn to page 94 in your 24 Stock Traders Almanac, and you will see the you know what? I'm gonna flash it up on the screen for y'all. You'll see this table of select percentage plays.
94?
94. And there's a big section where you see the word October, where all these seasonality start for all these sectors. I mean, it is it's sector season. It's annual buying spree time for us. We currently have correlated. Yeah, there it is. Thank you, sir. Correlated ETFs with buy limits below the market. If we get our buy signal, when we get our buy signal, the MACD, the previously, and there's a graphic version on the next 2 pages if you care to, if you're more visual like some of us. If we when we get our buy signal, we'll reevaluate and maybe just pull the trigger on them all, depending upon where they're trading. We're already into biotech, which starts a little bit earlier. I've actually got a bid in on that myself. Infotech's already in. Semiconductors comes into this best 3 months period, October, December. You can see that right there. So, it's just it's a bonanza. It's
transports, telecoms, semis.
Buy it all.
There's a lot of longs in October. Hence the buy in October and get yourself sober. So it makes sense that there's a lot of longs.
And you can see the letter next to the start and the end of it, the B, E, and M. We sort of break things up into thirds of the month, so it's the beginning of the month, end of the month, middle of the month.
Love it.
And we put this stuff out to the members of the Almanac Investor newsletter for we don't just tell them what to buy. We give them when, what price, buy limits, stop losses, and also we have something called auto sell. It's not really a target, but it's if the sector hits above either 10 or 20% above the sort of average return over the years for that seasonal period, we'll just take the profits. Utilities
Jeff,
is one that we're about to get
I got a very
out of.
important question for you before we let you run for the day.
Yep.
I know you're busy. I appreciate the time.
Thanks, man.
I've got like maybe 15 of these. How do you decide what color is going to be on the cover?
Sometimes it's what's hot in the world. 22 was like supposedly Tesla blue or something. That was one of the people on the team had that idea. It was sort of, like a reddish color, blue. Try to differentiate the 4 years of the 4-year cycle through black, green, blue, and red. And then, now that there's a few artsy designer people. I was like, give us something cool, you know. I mean, I'm
What's
not.
this year's color? Can you reveal
black.
it?
Yeah, it's going to be black with some design on it, like the little burst on this year, the 24, which I kind of like. I thought was pretty cool.
Yeah, it looks like I spilled coffee on it, but no, this is natural. This is by design. See that? Look at that, guys.
Yeah. So this one's got some like actually, if you look at Amazon, you'll see a little shot of it. It's got some like sort of circles. I don't know.
By the way, look what you wrote to me, JC. Buy in October and get your portfolio sober.
Almost a year ago.
This was it'll be a year ago Saturday.
Yeah.
Nice call, by the way, buying last October. I love that. So, folks, you heard it here first. Buy in October, get yourself sober. We don't necessarily just do that blindly. There are ways to enter. I love the fact I was just looking at that page. So many sectors and industry ETFs in October. Duh.
Right. Of course.
Makes a lot of sense. Mr. Jeff Hirsch, ladies and gentlemen, go get yourself the Stock Traders Almanac. If you take your portfolio seriously and you don't have the Stock Traders Almanac, your life has gone horribly wrong. So get involved. All right, Spencer, tell them.
You said it better than I could.
Appreciate you guys.
Thanks a lot, Jeff.
Adios.
Later, boys.
Strazza just wants to play golf with me and Jeff. Probably mostly Jeff more so than me, but Strazza just wants to play golf. So we'll get him out of here.
To answer the question, Phil, yes, you're still allowed to drink in October. We're talking about getting your portfolio sober.
Yeah. You want to get the portfolio sober.
Right.
And honestly, I hadn't really noticed. I mean, I've known forever, the best 3-month period of the year, November through January. I know all those things, but I hadn't kind of put two and two together that when you look at the seasonality of the sectors, you have so much bullishness in October.
Yeah.
Makes perfect sense, does it not? That was great. And by the way, seasonality, an important part of technical analysis. It's not its own thing. It's not its separate thing. Jeff and I know each other for a long time. So he's coming around, he's like, well, you got technicals, you got fundamentals and seasonals. I'm like, no, Jeff. Seasonals fall under the umbrella of technical analysis. We're analyzing the behavior of the market, understanding how those behaviors change during different times of the year. Does it not make it technical analysis? It's technical analysis 101. Come on. And then one more thing I want to add.
Yeah.
People are like, oh, this seasonality voodoo. Let me tell you something. If you know anything about humans, you know that us humans behave in different ways during different times of the year. We dress differently. We go to different places. We hang out with different people, right? Like in the holidays, you're going to spend, a lot of people spend more time with their family than they would during other times of the year. In the winter, you're dressed differently than you would in the summer. In the winter, you go to different types of play. You're not going to the beach in the winter. You're going skiing. In the summer, you're not going skiing. You're going to the beach. Like, we behave differently. We do different things. So if you think that those changes in your life, big changes, don't impact the decision-making in the stock market, then I don't think you know humans very well. That's how I see it.
I can understand why people would not make that leap, right? Because it is a bit of a leap, right?
If you don't understand humans and you've never looked at the data, then it's a leap. But if you've looked at the data and you understand humans, then it makes perfect sense.
At the very least, I think it's interesting. At the bare minimum, it is interesting stuff to see what the patterns are, different parts of the year and the election cycle. At the very bare minimum, it is just interesting to see.
True story. Before Jeff Hirsch and I were friends a long time ago, I would run to get this almanac. I'd read it cover to cover. I couldn't get enough of it. Now he laughs at me.
He says, JC, don't run.
He's a nerd alert.
All right. 9:36. We're going to have Sean on in a sec. Before we do that, just a couple of things that are moving this morning. As Kenny mentioned, we're sort of at the outset of earnings season here. So we got a few of those. Disaster of the day is TXG 10X. It's got 10X in the name. 10X Genomics. They're getting killed today. It's down 30% on their report, which you don't see too often because a lot of times these biotechs, don't always move so much on their earnings as much as on their drug headlines. But regardless, 10X is not 10Xing today. It's like I said, getting hammered. So that's the kind of the big disaster of the day. We had Delta, which Kenny talked about. We had Domino's Pizza report earnings. I saw this stat, and I know it's down this today a little bit so far, but their comp sales or their international sales has grown year over year for like 20 years or something like that. It's like insane. It's moving like clockwork. But anyway, their actual report was a mix that came in just a little bit late on the sales number. So like I said, it's down about 2.5% this morning. But it's still great business. Their earnings per share was a nice healthy beat. And like I said, they're international. They just grow like clockwork over there. So what else jumped out to me?
I drove by a Domino's in Hoboken yesterday, and I'm like, how is there Domino's pizza in Hoboken with so much good pizza in Hoboken?
Yeah, we have Domino's around New Jersey. What else? We had, I don't know. I think that may have been it that jumped out to me.
So they're starting to trickle in. Tomorrow's the big day with all these banks, basically.
Yeah, and notably about the banks, let's remember a bunch of them came out a few weeks ago and they lowered the bar. They lowered expectations for themselves heading into these reports. So let's keep that in mind. They lowered the bar so they can clear it. That's what's going to happen tomorrow.
Yeah, maybe. But then how much of that is already priced in by the market?
Yeah, probably a decent amount.
You know?
Why is Celsius up 9% this morning? That's interesting.
Yeah, well, I was looking at that. CELH.
Oh, wait. ACIC. That's the Florida insurance stock. It's up 7% today.
Nice.
All right.
Probably because it wasn't as bad as it could have been, maybe.
Wait. We have this chart from Steve. Let me pull it up. Oh no, this isn't the chart. Never mind. Steve had a nice chart of Generac and ACIC. I think he sent it out in the Strazza letter yesterday. But yeah. Wait, real fast. What is this Carvana chart? Did you want to talk about this?
Yeah, I think it's a great chart because really people are wondering like, how is this piece of crap going up? How is this piece of crap? How has this become the bellwether blue chip short squeeze name? Like, how has this become the best of the worst companies on the planet? And the answer is very simple. It's because look at that short interest, right? Look at that short interest. As Carvana sold off, as everybody realized what a terrible company it was, not only were the shorts not covering, as you could see here, the shorts were actually adding to their short positions as the stock was going down and putting in a bottom. So this squeeze that you've seen in Carvana, when you hear short squeeze, that's what this is. Yes, is it a terrible company? Yeah, probably one of the worst companies on the planet. Obviously, that's why it had such high short interest. But there comes a point where anybody willing to sell the stock will have already sold, and therefore there aren't any sellers of the stock left, regardless of how bad the underlying company might be. And basic math, if there aren't any sellers left and there are only buyers, which way is the stock going to go, right? You don't even need that many buyers if the sellers have run out. And then what ends up happening as the price of the stock moves up, short sellers have to cover. Stock continues to go up. That brings in the momentum players. That's us. Then the shorts have to cover. More momentum comes in.
Yeah.
More shorts have to cover. And then it gets to the point where any of the shorts that haven't covered, the margin clerks cover it for them. Cover it for them.
Hey, credit to the 11% of the float that is currently still short.
This thing was up. This thing was a lot more before, obviously.
Good luck to you, honestly. But this is a great chart. This is a trend. Actually, this may be the best chart I've ever seen that shows the power of a short squeeze and how short interest can relate to price, right? And so well done here.
Oh, thank you, Spencer. Thank you. I appreciate I appreciate that.
Because
listen,
this,
your
of course,
point,
as you
your point, it
said,
literally shows what happened. Literally,
right.
math.
And as you said, this is the blue chip. This is the short. This is the blue chip short squeeze stock. This thing was a literal, like, people thought this was a zero, right? And it actually almost was a zero. But as you noted, and as the chart here shows, why was the short interest going up when the stock was down in an 80 or 90% drawdown? What more do you want?
Yeah.
The stock is already down 80, 90%. What more do you want? It's
You know, and one last thing that I'd like to mention on this is that blue area chart, the world needs more area charts. Clearly, Spencer likes the area chart.
I'm a fan. What can I say?
The world needs more area charts. So that blue area declining throughout 2022 is very symbolic of what was happening in the overall market. You had all these, remember, like in 22, you had like these angry gloom and doomers, like on Twitter Spaces all the time.
They had a reason. They had a reason to be. I mean,
did they? The stock market bottomed 6 months earlier. They were just talking about they were just making things up, like how the debt crisis and the recession and like just making things up as they went along. These short sellers, not only did they not cover towards the end of 22, they were increasing their short positions. We went into 2023. In other words, we went into last year with the highest short interest in equities the entire bear market of 22. Not only did they not cover, they were adding to their positions, particularly in technology and in growth, which is why the NASDAQ had the greatest first half of the year in history last year. Not because the fundamentals of technology changed so much. The reason that last year had the best first 6 months in the history of the NASDAQ is because these schmucks were so short and they were adding to their shorts going into the end of the year. So this picture of Carvana and the short interest is really symbolic of what was happening more broadly
sentiment
in the market, particularly in tech and growth.
Yeah, sentiment was bad.
Bad for who?
Sentiment was bad just in the market and breaking news, right?
Also true. Right.
So
I mean, that's part of it. That's part of why they were so short. They're bearish.
Yeah, right.
And by the way, Spencer, to your point, everyone was bearish. Yes.
Yeah.
The short selling is as a result of the bearishness, right? But they overstayed their welcome. And they got their faces ripped off. Their shitty ETF that wasn't necessary anyway blew up in everybody's face.
Right.
They embarrassed the hell out of themselves.
Wait,
remember?
Good question, and then we'll bring Sean on. Is it worth it? I don't look at a ton of historical short interest charts. Is it worth it? Like, would you ever do like TA on a short interest line, or is it just not worth it because the data is laggy?
We're doing it right here.
I mean, like, would you ever like draw like support or resistance on a short interest? It's not price, right? It's
no, yeah, of course you can, because look at that 2018, 2019 period, and then look at that black line. That's the short interest.
Yeah.
Look how that black line broke down. Those are shorts covering, right?
Yeah, but like the data is like too lumpy, right? For it to
listen, technical analysis again is not about drawing lines on things and like, right. It's about analyzing the behavior of the market and therefore market participants and understanding the market dynamics of the short interest. Because remember, people who are short stocks, they are promising you that they are going to be a future buyer, guaranteed future buyer. Shareholders are only promising to be future sellers.
Some of them. Bottom line here, who said in the chat, Dawson. So we should all be shorting Carvana based on this chart right here, is what this shows.
You could knock yourself out. There's still, what do you say? 11% is still short. So you got some company.
Yeah, you got some people. I mean, it's not 50% or what it was in a couple years ago, but 11% is not nothing. Double digits is not nothing. All right, let's bring on Sean and talk about what you guys talked about yesterday a little bit, just for a second.
Oh, those naked puts in Amazon. Looking pretty good there, Shawnee, baby. Pretty good. But I want to talk about this because it's important. You sell naked puts in Amazon yesterday with the caveat that you want to own the common stock.
Sure. Yeah.
But that's the key part.
Right. We talked about it yesterday. We like the stock. We're bullish on the stock, but we've got earnings coming up. Earnings is always a landmine, as we know. And we were saying, look, there's some premium. If you want to sell puts here, take advantage of that premium, you can do that. But you have to be, like you said, you have to be one of those people that wants to own Amazon if that stock gets put to you, and you'd be happy to get it put to you at a better price. So if you like that, and if you're in that camp, sell puts all day. I mean, I'm looking at it right now, and the premium is still there. You could still sell puts all day in this thing if you like it. Not something I'm going to do, JC. It's not my game. But I don't hate it for people who, want to position long in stock at better prices.
But just generally speaking, with the volatility index at 21, the stock market making new all-time highs. S&P new all-time highs yesterday. Volatility index.
Yeah,
21.
and that just speaks to the challenging environment we're in right now. I'm noticing, JC, that clearly earnings are on deck because markets are acting weird. I mean, the last 3 or 4 positions I've entered over the last 2 weeks, they're not starting off well. We're not stopped out. The positions are still in our wheelhouse, and they can still perform the way we want them to. But right out of the gate, it's been a little frustrating, a little banana in the tailpipe situation here. So that's how you know that
Banana in the tailpipe situation.
What was that? What was that?
Never heard the banana in the tailpipe?
No. What?
It's like the car can't get the exhaust out, right? So like it fits and starts when it gets going. Boy, you guys, must be an old man
Spencer
reference.
Spencer Israel with manual transmission. It's like
I've never heard that phrase.
I'll
it.
Google it on Urban whatever and send you with the definition of it. But anyway,
Urban Dictionary.
Yeah. So it just speaks to the challenging environment we're in right now. We have earnings on deck. Everybody's kind of in a wait and see situation. And we're going to get some big moves in both directions. And market participants are positioning accordingly. And it's making for some fits and starts right now. And I'll have to admit, I'm frustrated. Like I said, the last 4 or 5 positions I've put on over the last 2 weeks, none of them are doing exactly what I would like them to do. But we'll see. We'll see what's up. Did we lose JC?
Nice, still here. He kind of comes and goes. There he is.
There he is. You had to blow your nose?
Oh, Shawnee.
He had to get some coffee. Look at that.
Shout out, Duncan.
Cheers. Cheers.
So Sean, just talk to me about kind of just generally speaking, you don't have to get into all the details that we talked about in yesterday's meeting, but in this environment, we had a nice conversation with our mutual buddy, Jeffrey Hirsch, talking about, this is seasonally, we're going into the most bullish time. Buying in October last year was a great idea. Buying in October the year before that was a great idea. Buying in October the year before that was a great idea. Buying in October the year before that was a great. Is it going to be like that? When I look at the I know that you're not one to overthink the VIX, and I love that, and I'm not either. But if we were to overthink the VIX at 21, with the S&P 500 at all-time highs, what are people so scared about?
I think people are scared about things outside of the stock market, right? We've got the election coming up. We've got all this nonsense in the Middle East. We've got hurricanes blowing up the entire southeast of the country. I mean, there's things outside of the stock market, I think, that are weighing on market participants. But yeah, it is very curious. And we've been observing this all week about how S&P's making all-time highs, VIX above 20. That's not something you see very often. Although you and I were very surprised. We had our analyst Grant to do a little deep dive and find that there's actually, 57 times in history where VIX has actually been higher than this.
47.
S&P making all-time highs.
On a weekly close, on a
Yeah.
weekly closing basis.
You and I were both surprised by that stat.
It was more than we thought, a lot more.
Yeah.
Yeah.
But still,
That's why we look at the data, right?
That's why we look at the data, right? So maybe we shouldn't be all that surprised, JC. Maybe we should just be like, eh.
Yeah, I mean, listen, these days it takes a lot to surprise me. I mean, I'm punch drunk at this point, as are you. We've seen a lot over the last few decades being in this business. My mom, I was texting my mom. My parents are down in Miami, so I was just texting my mom to see if how things are. How are things down in Miami? I'm hearing it's pretty good, but I want to hear it from the source. So I asked Ma, and she's like, "You should watch CNN. They're having great coverage of the hurricane."
No, they probably were actually, JC.
I wanted to text my mom so bad I didn't, because I'm trying to be a good son. I'm like, Mom, the day that I am sitting there watching CNN, just shoot me in the brain.
No. That's the time.
My brains out.
That's the time you want to watch during the weather events.
Sitting there watching CNN? Are you
Oh
fucking kidding me?
man, weather events are the time to watch cable.
What would
news.
you rather watch?
Paint dry.
No.
Man.
We're talking specifically about hurricane-related info. Where would you get your hurricane-related info?
Twitter.
Twitter's good. Twitter's good. That's where I saw the
CNN. What fucking year is this?
Come on, man. The hurricane footage, man. There's nothing better than that. I mean, you get the reporters that are like standing in the wind and everything's blowing.
By the way, nothing against CNN. I got no problem with CNN. I'm just, I'm sure they're great. I'm sure they love their kids.
I'm still waiting for the footage of Jim Cantori to get plastered against a wall. I'm waiting for that. That'll be great ratings.
You know what I like? I like the weatherman when he's like pretending like the wind is like, so he's like, oh my God, the wind. And then you see like two people like strolling behind him, like just very nonchalantly.
You see the guy walk by with the surfboard in the background.
Like, dude, you suck.
No, that's the time to watch. Anyway,
Bill says it barely even rained in Miami. That's great. That's what I heard too. That's good.
A lot of tornadoes up there. A lot of tornadoes up by Fort Lauderdale, I saw.
Is there?
Yeah.
All right. One for the good guys, I suppose. Could have been a lot worse. It was pretty scary as a potential category 6. Are you shitting me?
Hey, listen, I lived in Tampa Bay for 5 years, 20 years ago. And I was telling Strazza, like, look, Tampa Bay, the Tampa Bay region has not had a direct hit from a category 4 or higher in 100 years.
Yeah.
And the population growth that area has seen, particularly Pinellas County, where St. Petersburg is. Pinellas County is Florida's most densely populated county. And there's only 2 roads out of there that go north. And those roads are not big roads. And so if they ever get hit with a direct hit category 4 or higher, it will be worse. You've heard it here first. It'll be worse than Katrina by a long shot. That's a bad situation there. So they dodged a bullet with the hurricane coming in lower. Thank goodness for them. Terrible for Sarasota and Bradenton, areas over there that I know very well. I used to play hockey in Bradenton. Man, I hope that hockey arena is okay. I love that place. But man, Tampa Bay and St. Petersburg in particular, I know they probably suffered a shit ton of damage, but it could have been way worse.
Yeah.
I saw
One for the good guys on this one.
I saw like 3.25 million customers this morning without power, which is like 6 million people. Think about it. So a lot of damage. All right.
I don't know why they don't just turn the power off.
Yeah.
I want to give a shout out to New York City.
Again? There's been a lot of those.
Go downtown. If you find yourself in Midtown Manhattan, leave. Go south of 14th Street, anywhere south of 14th Street. Go to Charlie Bird on the corner of King Street and 6th Avenue, right there off Houston. Charlie Bird. All they play is 80s and 90s hip hop. The Razor clams at Charlie Bird are delicious. Razor clams. You never see razor clams. And then go to Washington Square Park. Go to like that northeast corner of Washington Square Park. Sit there, watch the jazz trio, watch some of these up and coming artists, throw them a 20 spot, and then go about your business. That's my advice.
All right. I love that you're talking music. That's a great segue to my recess. I experience, I don't know if you guys go out to like clubs and see music very often. I don't do it as much as I used to, especially when I lived in Chicago. But I had a music magic moment this weekend, Saturday night in Denver. I went to see a band that I had first discovered this summer. They played a festival here in my town. I went to see them. They were the headliner. They were great. They were everything I expected them to be. But what I did not expect was the opening band. This was a 500-person room. They were the opening band. At the time that they took the stage, there were maybe 50 people in the room, which is like the worst thing, right? For your opening band, you got nobody there. Nobody cares. They are annoyed that they have to sit through an opening band. This band that nobody knew, they're from Canada. They came in, first note, wow, they caught the room. And then as everyone arrived for the headliner, by the time this band was done, they played an hour 15 set, which is unheard of for an opening band. Yeah. The room was full, 500 people. Nobody wanted this opening band to leave the stage. They absolutely killed the room. Nobody knew who they were, and they were absolutely amazing. I mean, I felt like I really witnessed.
What's the name of the band?
Yeah. The name of the band is Jesse Roper and his Pretty Good Band. Jesse Roper. It's rock. It's like rock. It's blues. It's, Americana maybe. But man, what a performer. What a show. What a showman. He had the whole room coming out of the palm of his hands. I mean, it was unbelievable. And they were so good. And I was so happy. I actually got to talk to the guy after the show. He was hanging around the merch table like after the main band ended. And I got to talk to him a little bit, found out that they were spending some time in Colorado playing a bunch of little gigs of their own. So they played in Boulder last night, just like their own show. So of course I went to go see him. Killed it again. These guys, watch out, man. Jesse Roper. Check him out. Awesome.
The guy looks familiar.
Dude, I'm telling you, he puts on quite a show. If he ever comes your way, I mean, they're based out of Vancouver, Canada, or Victoria, Canada, British Columbia. I don't know how often they make it to the East Coast, but if they ever come your way, boys,
Sean, they're in Buena Vista tonight. I don't know if that's close to you, and Hotchkiss on for Saturday.
Yeah, the locals actually call it Buena Vista, which is shocking to even me. But that's a couple hours. It's a couple hours south of me. It's a beautiful town. But
Buena Vista, really? Okay.
Yeah, that's what the locals call it. I don't know why. It makes no sense. Nobody understands why. But
when was the last time you were at the Red Rocks? Who's the last band you saw at Red Rocks?
This is the first summer in the 12 years I've been in Colorado that I did not make it to a show at Red Rocks this summer. Although I did go to Red Rocks and hiked around there a few weeks ago. But I did not.
What was the best show you saw there?
I saw My Morning Jacket last summer.
Best ever there?
Red Rocks is great. This is a controversial take around here, but not my favorite venue in Colorado. But Red Rocks is great. It's a bucket list. You got to see it for sure.
Not your favorite venue. Okay.
No, I love it, but it's not my favorite. There's a couple other venues here in Colorado.
Bands love playing there.
Oh, yeah, dude, it's a great venue. I mean, it's in the rocks. I mean, it's man-made, but it's man-made within a natural amphitheater. It's really quite unbelievable when you see it for the first time.
Yeah.
My recess was just going to be, Sean, what the heck happened on Sunday, man? That was probably the strangest ending.
You can't be 15-2 without losing 2 games. You know, it's just what happens.
That's technically true. But yeah, that was malpractice is what that was on Sunday.
The New York Jets are coming along this weekend at the perfect time. You know, good team for us to beat up on and get the engines firing again at home. So I got no worries about my Buffalo Bills.
All right,
no one's going undefeated in the NFL these days. Not anymore.
It was pretty brutal.
Miami Dolphin thing to do.
Pretty brutal. All right.
Hey, when you play 14 games, maybe. Yeah.
Here we go.
All right. Sean's got the jam session today at noon. We got chart request live at 1:30 because at 1 o'clock today, JC and Strazza are going to hop on, do a special stream. I'm going to drop the link in the chat. It's actually on YouTube already. How to find these breakout trades before earnings season. That's the catch, right? Because
earnings volatility drift conversation we might be having.
So I just dropped the link in there in the chat. It's like I said, it's already up on YouTube. 1 o'clock today. JC and Strazza are doing that. We'll see you guys there. Thanks to Jeff Hirsch. Thanks to Sean for stopping by. Thanks to everyone in the chat. Smash the like and go make some money. All right.
Adios. Go Canes.
I can't take no loss. I don't even know what it costs.